Okay, so I've been asked multiple times to go over how I specifically calculate risk and reward. Something I'm really proud of is that if you look at my accuracy rate over the last 30 days, it's only 54%, which is not that great. And the way I can make this profit here is because my risk and reward ratios are pretty solid overall. And so make sure you hit the subscribe button because that's what we're going over in today's video. Okay, so to show you an example, if we are looking to enter AMD for a VWAP fade, right here around the VWAP going short, the first thing we're going to do is look for confirmation in a level above my entry here. And so we can see a lot of confirmation in this level here because you can see it touches the exact same spot right here, here, and here. And so then we can document that level by going here and writing this level out. And now we have a solid risk level above my entry. That way, if it breaks that level, I can get out of the trade or set my stop loss at this point. Okay, so the next thing we need to do is calculate the difference between our entry level, which would be right around here at 33.13, and our risk level, which was above us at 33.22. That gives us roughly a 9-cent risk in this trade. And really, I would like to say that this is just my personal preference on calculating risk using intraday levels. Another one I really love to use is the low of that first 1 minute candle at the open. If you document that level, you can see it actually has a lot of sway over a stock's movement as well. And if I extend that level to the left, you can also look at it as confirmation in pre-market as well. And again, just like I said earlier, the big thing to look for with a risk level is confirmation. You want to see multiple touches to that point to make sure you really have a solid risk level to base your trade off of. And so now we go back to the long-term chart to see if we find confirmation there as well. And you can clearly see that here with CRON. You can see multiple touches to that exact risk level we had, and you can see it acted as a lot of support and resistance on the long-term chart. That lets us know that it's a pretty solid risk level to base our trade off of, and if it actually does break that level, we can comfortably and understandably get out of the trade. Okay, so now that we know where our risk level is, basically where we're going to get out of the trade if it goes against us, the next thing you want to look for when you're trying to calculate risk and reward is where's your actual reward target, which is where you're going to take profits. One of my favorite levels to use as a reward target is the previous high or low of the day. And so you can see an example of that with AMD here, and this is almost always what I use for a VWAP fade, because in my opinion, that's the most obvious reversal point. A lot of the times when a stock pushes down and tests the previous low of the day, it's going to bounce back up, and vice versa. A lot of the time when a stock is moving up and tests the previous high of the day, a lot of the time it's going to get rejected there, at least originally. That's one of the big reasons why I use these levels as reward targets, because that's the most obvious reversal level again. Now, just like the last one, the next step in this is to calculate what the distance is from our entry level to our reward target. So we know our entry is 33.13 and our reward target is down here at 32.91. That means that the distance is around 22 cents. And if you remember what our risk level was, it was around 9 cents. And so that gives us around a 2.5 to 1 reward to risk ratio, which just means that our reward target is 2.5 the size of our risk. That way, if it comes down and actually touches that level, you can take profits. And if it does bounce back, you're more protected in that trade. And if you think about it, that gives us a pretty solid reward to risk ratio, and I typically try to shoot for at least 2 to 1 or better with my trades, but that all depends on the accuracy of your strategy as well. You also may want to understand that the more volume that pre-market actually has, the better the levels and more defined, and so you'll actually be able to see the most recent levels that you can base your trade off of if you're not looking at the intraday levels, at least right at the open. We can go over a long example of calculating reward to risk as well. And so if we're trying to buy a stock instead of shorting it right around this dip here at 32.94, the first thing we want to look for is support confirmation below our entry. And this level is our risk, and we can see that level here because we have some confirmation in that opening candle or high of the opening range right there. That way we have a pretty tight risk if we look at our entry being 32.94 and our risk level is around 32.88. That gives us only a 6 cents risk level in this trade. And if we actually document this level here and then extend it to the left, we have multiple confirmations in pre-market in this level, and we also have some confirmation on the long-term chart as well. Now that we have our risk calculated and it's only 6 cents, the next thing we can look for is our reward target. Just like the last one, I typically prefer to use the previous high of the day as my reward target, right around this level here at 33.15. Since our entry level is right around 32.94 and our reward target is all the way up at the previous high of the day at 33.15, that gives us around a 21-cent reward target. And if you go back and remember that our risk is only around 6 cents, but our reward target is around 21 cents, that gives us around a 3.5 to 1 reward to risk ratio. But really guys, the big thing to take from this entire video is that confirmation is key. The more touches to a specific level, the more sway and the more significant that level is in technical trading. Another thing to consider as well is that the longer time frame trade, the longer time frame chart you look for confirmation in. So if it's a quick scalp, you might not need to look for confirmation in the daily chart, but if it's a long-term trade where you're holding it for a few hours or even a few days, you definitely want to look at the long-term chart as well. And so I hope that makes sense. Let me know if you have any questions and leave them in the comments below. If you want to help support our channel, click the subscribe button and click the bell next to that, and it will alert you every time we do go live, and click that like button as well, guys. Good luck in the markets, and I'll see you all tomorrow morning.